Hello and welcome to Indiaspend Debates. India is facing a jobs crisis. Startling statistics. Between 2004-05 and 11-12, 37 million people moved out of agriculture. In between 2011 and 18-19, 12 million people will remain in agriculture, which means there's going to be a serious imbalance, and which also suggests that the economy is not doing as well as it should be, as something that you perhaps already know. Rating agency CRISIL has come out with a report on the subject, and I'm joined by Chief Economist DK Joshi, who's going to tell us what this means for the economy in general and why this is happening. Mr. Joshi, thank you very much for speaking with us. So tell us, this is indeed frightening, right? Where we thought that jobs would be created in urban India, manufacturing and absorbing people from the countryside, we're actually seeing a reverse flow. How did we reach this position?
Well, I think a couple of things here. One is that the growth itself has materially come down. Between 2004-05 and 11-12, the GDP growth was 8.5% per annum. And now from 7 years after that till about 2018-19, GDP growth will be close to 6%. So you are growing at a much slower pace, 250 basis point lower than what you were growing earlier. Now that itself reduces the job opportunity. The second thing that has happened is that the ability of the economy to absorb labor has reduced, which means the labor intensity has reduced. Right. Or in other words, fewer people are required to produce the same amount of output. And this has particularly happened in segments like which were labor intensive, like manufacturing. Now manufacturing today employs far fewer people than it used to earlier.
Right. So the statistic that you've quoted is 15 people for every 10 lakh rupees of GDP earlier, and today it's 9 people for every 10 lakh rupees of GDP.
That's for the overall economy. Yeah. And I think within that, the manufacturing sector is particularly hurt most, and it is regarded as labor absorbent. Right. Reason for that is the complicated labor laws and automation, which is a part of the manufacturing sector's progress. But I think it is happening at a rather faster pace.
Right. So how much of this is a projection? Because what you're saying now is that this will happen because you're also projecting GDP growth to be down, going by the current economic situation, right? Is it possible that it could reverse?
Reverse in the sense that...
Could GDP growth go up, for instance, next year, and then we start seeing a change or a reversal in job flow or creation?
Well, I think this is an average for the next 5 years and for the 7-year period, and I think by all statistics, I think you've already lost out 12-13 in this in these 13-14, and from 14-15 to 18-19, we are assuming 6.5%.
Right, so you're saying we've already seen 2 years of reverse migration, as you've termed it.
Well, I think it would have happened. We don't have the numbers as yet. I think NSSO conducts this surveys every 5 years. So as of now, we don't have the statistics. I think.
Okay. So why is this happening? I mean, I know you talked about the manufacturing slowdown and the manufacturing. Why has not there been enough, let's say, economic activity on the agricultural side or the rural side to absorb this or retain the jobs that are leaving or were leaving?
Well, I think as the economy develops, the people move out of agriculture into more productive non-agriculture activity. That is what has been happening. Yeah, that's the general thing, and that is desirable because the non-agriculture is more productive than agriculture. You improve the productivity of agriculture, you push the growth up. Now, why that is unlikely to happen is because the non-agriculture sector itself is not going to create that many jobs. One, because of growth rate decline, and second, because of its reducing ability to create jobs.
Right. So you're saying agriculture as a sector can never be a job creator or absorber as perhaps manufacturing or services? Already
it employs disproportionately large number of people. I think about nearly 50% of the population works in agriculture area. It is only 14% of the GDP, and it is 86% of the economy is absorbing 50% of the labor. So it's already disproportionate. You need to move people out of agriculture. And by the way, so many people are not needed in agriculture. It's mostly disguised employment. I mean, people appear to be working, but they're doing nothing. So even if you move people out of agriculture, the productivity in agriculture is not going to fall.
Right. So you've also said that we are seeing productivity increases, like it's happening in other parts of the manufacturing world. So even if there were people coming into urban India or into the manufacturing sector, it's quite likely that they may not find the jobs because the productivity increase rate is perhaps quite sharp too.
Absolutely, and I think so. That is why what you need to do is, I think, looking at the global dynamics, I think where there will be more demand for our exports, etc., or where, for instance, countries like China are moving out, is activities like textiles, etc. And I think here, these are highly labor absorbent sector, and these are not doing very well in India right now. I think you need to push these sectors which absorb a lot of labor, because otherwise how will you employ them? And I think there's a global opportunity also coming, because China is withdrawing out of these areas where because the wage rates are going up there. So I think we need to latch up on this opportunity. Otherwise, it's already, we are missing it out and others are already lapping it up.
Right. So let's talk about how this could be fixed, right? So the government has been talking about a skilling program, for instance. The government has been talking about a manufacturing blueprint for the country and so on and so forth. So doesn't all this or will not all this help solve the problem to some extent?
Absolutely. If the program that government has, which is to take the share of manufacturing to 25% over the next 10 years, if that happens, yes, it will obviously create a lot of jobs, but there's no sign of that happening as of now. Manufacturing is trailing behind GDP growth for the last 2 years, and the prospects are not too bright going ahead. So I think you need to, there's a huge amount of work effort that is required to do that, and that is, anyway, it was a highly, what should I say, very optimistic projection of manufacturing at 25% of GDP.
Right.
And no other country has pushed its manufacturing so fast ever. I mean, so it would have been anyway very difficult, and now it has become far more difficult with the...
And what about services, which was supposed to be the panacea of sorts, which would absorb additional labor, and as it has already, and perhaps would take India to be more a service-oriented country as opposed to being a manufacturing-oriented country?
Service sector is absorbing labor, but it cannot absorb labor at the speed with manufacturing can. I mean, there are many ways of looking at it. If you look at, for instance, 3 services which have grown very fast in the last few years. One is the IT/ITS, which is also referred to as business services. Then you have real estate services, and I think then finally you have financial services. Now these account for about 19% of GDP, but only 3% of employment in the country. So they are not very labor absorbent. These are the fastest growing parts of the services. The labor absorbent part of the services are health, education sectors, which haven't grown that fast.
Okay. So from a prescription point of view, you would say that areas like construction, health, education, infrastructure, these are the areas which need more investment if we are to try to reverse this problem?
Absolutely. I think you have to eventually provide employment to these people. So I think you need to make sure that you need to nurture your high-end capabilities, whether it is IT/ITS or it is financial services. But I think at the same time you can't lose sight of the brick and mortar sector, which are fundamental. I mean, we rank so low in health, so low in education, so low in infrastructure. I think your ability to sustain growth will also reduce. So if you invest in construction, which is a highly labor intensive activity, if you invest more in infrastructure, in health and education, you're creating a better future for yourself.
Right. So let me come back to a question I asked you earlier. We said that, if we had higher growth, right? For instance, did we predict the 9% growth that we saw? And we were actually, once it became 9%, we were talking about 10% growth, and that how it would lift the whole economy and take everyone along with it. Is there a possibility that GDP growth might actually accelerate faster than we anticipated, maybe for external reasons rather than internal reasons?
Well, I think that possibility is very low right now for a couple of reasons. I think one is that the global dynamics are much weaker than when we grew at 9%. And I think nobody is talking of a sudden sharp lift in the global economy on a sustainable basis.
Okay.
Europe debt crisis is far from over. Japan is experimenting. China has materially come down. I think its new normal is 7.5%. And US is probably the fastest growing developed part of the world. So, but I think there are mixed developments across the world. So there's not enough kick from the world economy. Domestically, we have our own problems like inflation, fiscal deficit. How do you boost growth? I mean, you can't cut interest rates sharply to boost growth. You can't reduce you can't expand government spending because of fiscal pressures. So where will the growth come? I mean, so that question is unanswered. There are surprises, because I must also point out that there is a cognitive bias in all forecasters, that they get influenced more by the current scenario. If you move from a pessimistic scenario, you forecast pessimism, and from an optimistic scenario, this always happens. I mean, this has. But I think even if you correct for that, I think growing beyond 6.5% is going to be very difficult. If you look at the planned growth rates, the last two plans, the GDP growth was around 8% average. And now I think in the 12th plan, which we are currently in, 2 years we've already lost because we got 5% growth. To get 6.5%, you need 7.5% in the next 3 years. So you've already slid quite sharply in growth, and the drop has been much sharper this time because you were getting used to a higher equilibrium rate.
Right. So let me kind of, if we were to sum it up now, the problem is, as you say, severe. What are the outcomes, or what could go wrong, or what can happen? I mean, this is obviously going to have social impact. Or are we as an economy resilient enough to have to weather this as we have perhaps weathered similar crises before?
Well, I think it's quite interesting that India's population was getting to be viewed as a demographic dividend. It was always regarded as a liability earlier because you have to provide more services to these people. Feeding them was a problem. But when economy started growing fast, it was being viewed as a dividend, more production, more you can become a work factory for the world, so to say. I think so there were opportunities that were being seen. But I think if you don't have jobs for these people, I think it's going to be a big drain on fiscal resources, because you'll have to support them through the state programs and so on, whether it is Narega or whatever it is.
Okay.
So I think it's going to become a liability instead of
there's a social outcome and there's an economic outcome which you feel could be in the form
to avoid
of
the social outcome. I
so
think
on.
you'll have to support these people state will have to support these people. I mean, otherwise I think the young people without jobs is not such a pleasant scenario to be in.
Right. So that's one outcome. So if I were to look now at the solution, what's the one or two solutions that we need to focus on now to make sure that we can try and alleviate the situation, if not reverse it?
Well, I think one is to get rid of the bottlenecks to growth. I think so that you at least start moving on a higher growth trajectory. And by the way, even 6.5% is not certain. It is contingent on you getting rid of many of the bottlenecks which have now emerged. And it also depends largely on what kind of political mandate you get, whether you get a decisive mandate or not. So I think all that apart, I think from an employment perspective, we need to focus on infrastructure, we need to focus on health, education, which are more labor absorbent part of the services. We need to skill people, as you were pointing out, because even if you have jobs, you don't have enough people for those. I mean, the kind of jobs that will be generated in banking and financial services would be more client facing, and we don't have enough trained people for them. So I think keep tab of the market and I think skill people accordingly. And even I think what we found was in our interactions with the industry that 70% of the engineers who come out, they are not directly absorbable, because they need to be intensively trained before they can be put on the jobs. So I think there's a lot that needs to be done on the skill development front.
Right. And last question. So who's thinking of all of this?
Well, I think it's not that people have not thought about it. There is, as we were talking, there is a blueprint for improving the manufacturing sector. Similarly, there's a blueprint for skilling people. I think there's already a lot of work going on, but I think it needs to happen very fast. Unless you grow fast, I think you will not be able to create jobs. So you need to increase the size of the cake so that everybody can.
And last point, what we didn't talk about is the entry of women into the workforce, because on the social side, we're obviously doing a lot of things, perhaps right or partly right, which is in terms of education, access to education for women, and encouraging them to join the workforce. But on the other side, on the economic side, we're just not prepared for it.
Well, I think absolutely. I mean,
China,
women participation rate is very low in India, unlike China. I mean, China men and women workforce participation rate is almost similar. I think now if you were to make more women participate in the job market, you need more jobs. I mean, and we are working in our calculations, working with the same workforce participation rate that we see today, which should change. I mean, it is desirable to get more women into the workforce.
Right. So, if you were to conclude, would you do so on an optimistic or a pessimistic?
I think we need to work hard with a lot on this area. There have been surprises, positive surprises, but I think the 9% growth rate that we saw seems very difficult right now. Even I think from a monetary policy perspective, it will generate higher inflation, because see, I mean, to give you an example, I often give this example of a bullock cart. I mean, if you put a car engine on a bullock cart, it can move ahead very quickly for some time, but then the wheels will come off, because the body is not structured for that kind of speed. So I think we need to improve our infrastructure. We need to strengthen our economy so that if it starts moving fast, it doesn't create much inflation. So I think there are many issues involved here, and I think it's a pretty complicated situation.
But this is a starting point, because the acceptance of the fact that we have a serious jobs problem, which could lead to many other problems, is I would imagine the beginning of the start point.
Yeah, I think what is given is that the workforce is going to expand. You can't alter your demographics in short period of time. But what is not given is whether you will have enough growth and enough jobs.
Right. On that note, we have to conclude. Thank you very much for speaking with us, Mr. Joshi. That's all we have time for on this edition of Indiaspend Debates. We'll be back. Thanks for watching.